You're listening to The Real Wealth Show with Kathy Fedke, the real estate investor's resource.
How do investors build up a portfolio of rental homes when conventional financing, Fannie Mae and Freddie Mac, only allow a person up to 10 investor loans? I'm Kathy Fedke, and welcome to The Real Wealth Show. Well, if you want to be a big player, you've got to act like a big player. Single family funds that own thousands of homes, they use commercial lending, and so can we. Our guest today has been helping both Wall Street funds and mom and pops build a rental portfolio with the help of cheap commercial loans. And he's here to show us what's available. Cortney Newmans is the head of national accounts and commercial lending at Lima One Capital. He has personally originated over $275 million in single family and multifamily assets, and he personally owns over 65 doors. So Cortney, welcome to The Real Wealth Show.
Thank you so much for having me, Kathy.
So nice to see you again. I would have seen you probably 4 or 5 times in the last few months, but
I know, given the circumstances, cannot hop on an airplane right now.
It's kind of nice not traveling as much, though, isn't it?
It is. I've gotten to spend a lot of time with the family and actually got some time to really go over the business plan and have some clarity. So it has been really a good thing to happen right now.
Yeah, I mean, I would see you at most of the events that I was at, and I was on the road all the time. And it's interesting. I think people are realizing they can get potentially even more business done by not running around so much.
That is very true. I have been very productive, and then the time management thing has been through the roof right now because of COVID. It has me being able to reevaluate everything and then just have everything systematized right now.
Yeah, wonderful. So let's talk about the changes in the lending world. Uh,
Yeah.
you're in the commercial loan business. So what kind of real estate do you lend on these days?
So right now we're lending on single family 1 to 4 units, and all of our stuff is non-owner occupied. So we don't lend on any owner occupied business, and we're a non Fannie and Freddie lender. So all of our stuff is commercial mortgages based upon the debt service of the property.
So 1 to 4 residential units, but not over 5.
We can lend over 5, but it's not a long-term product. It's more of a bridge product to get you ready for a commercial bank loan or Fannie or Freddie multifamily loan that you would take out.
So why would somebody come to you versus a Fannie or Freddie conventional loan?
I get that question all the time. The reason they would come to us will be if they were going to be capped out on their 1 to 10 properties that they can qualify with Fannie or Freddie. And so they come to us because they've gotten to the point where they're built their portfolio past the point where they cannot qualify conventionally. And now they need an alternative to that route of going conventional mortgages. So our process is we don't really qualify based upon your personal debt to income. It's all based upon the debt service of the property, and it covering a certain ratio that service to the debt on the property.
And do you do portfolios?
Yes, we do. We love doing portfolios, and it helps on the transaction costs, and it helps on the management on the side of that as well. It's because you have one mortgage payment for, let's say, anywhere from 5 to 100 properties that we've done.
So let's say somebody has had their 10 Fannie Freddie loans, they've maxed out, or maybe it's a couple and they've each got 10, so now they have 20 properties, all with Fannie or Freddie loans. Could they come to you and you would do one blanket loan on all 20 of those?
Yes, we would do those. We would do that in a portfolio loan where they can free up their Fannie and Freddie slots again and be able to get a portfolio loan for all properties and have one payment up to 75% loan to value on for that particular portfolio that they do.
And for a lot of people, they may be able to get all the equity out of the properties that right, since values have gone up.
That is true. That is very
I just
true.
found out a property, sometimes people don't check on the value of their properties, but we bought I don't know how to say it, a very middle income property in the middle of Pennsylvania for, I don't know, $45,000 about 5 years ago.
Wow.
I just found out it's worth about 120. I had no idea. So something like that, could you give me cash out on it?
Yes. So right now, just giving you a pretense, I would say March 15th. I was actually in California when COVID hit, and pre March 15th, we were cashing out up to 75% loan to value. After March 15th, it's like the whole world ended. And I think we're at a standstill as far as commercial lending for about, I would say, 60 to 90 days where we didn't know where we would land. And now we have gotten some clarity where we're going to be. So right now we can cash out up to 70% and we can do a rate term refinance at 75% loan to value on those particular properties.
Amazing. And what kind of rates and terms are we talking about? What kind of rate and how long would you is the hold?
Yeah, so we have array of products, but
Sure.
usually when I'm talking to people that are doing these long term homes holds, I would say if you're not doing a large portfolio loan, what we have to offer are a 5/1 arm, a 10/1 arm, and then a 30-year fix on a fully amortized over 30 years. In the commercial space, our 5/1 arm and our 10/1 arm are going to have the lowest rate. So you're going to get the more cash flow um, from day one. And then when you go to the 30-year fix, it's going to be a higher rate. And because it's a longer term loan, that's going to be 30-year commercial mortgage. So it's going to be probably about 200 to 250 basis points higher than your normal conventional loans. But what I would say from our 5/1 arm to 30-year fix, you're looking at anywhere from the mid fives up to the mid sevens if you choose one of those products.
Okay. So if someone were to basically refi their current portfolio with a commercial loan, would Fannie and Freddie need to know about it if you were going to get new loans?
You technically do not need to know about it because it's
Okay.
not a hit on your personal credit. It's all based upon your business credit. So we do all of our loans to your either LLC, S corporation, or some type of entity that you have.
Okay. All right. So it's it seems like what'd you say on the longer term? It was around a 5 to 7%.
Correct, correct.
So you would need a pretty high cash flow property to be able to make the numbers work on that.
Yes, you do. I think right now I've gotten quotes from around a lot of conventional mortgages. Somewhere you're seeing it in the low fours to I would say high fours on their side as far as conventional mortgages for investments right now. So we're probably about trending about 100 to 100.
What is the strategy then for people getting these commercial loans? I mean, who are you seeing out there? I should say this again. Who are your clients? You don't have to say their names, but what are they doing?
So I think right now it's the array of people. So because property values are so high right now, a lot of people are saying, "Hey, let me refi out and take the equity or the money that I have in those properties. If I can do a let's say a 60 to 70% lower leverage loan where I still have some equity left in those properties, but let's take that money out and be able to go buy new properties." That's what I've seen. And also, like you said earlier, it's the people that really don't have another alternative because they're capped out on their 10 or 20 if they're in a joint household together of the Fannie or Freddie loans. And so I would say it's either one, they're looking to pull equity out because property values are so high now. Two, they have ran out of their Fannie or Freddie, or they want to pull equity out and then go buy more because rates are at a all-time low right now. So I think you have those three category of customers that are coming to us for our type loans.
So the fact that you guys, as a pretty large commercial lender in this space, kind of had a moment of pause, like all of us, you're like, what's happening? And then
Yes.
came back in. I'm assuming that means you have confidence in the housing market.
Yes, we have a lot of confidence in the housing market. As we took a step back because we had no clue what was going on, we had to react to what the market is going right now. And I think me seeing the data that has been provided over the last 60 days, we have total confidence that the housing market will keep going up. And then just I know we're talking about investing right now, but right now I was actually on a call where John Burns was presenting. Some data, and you have home ownership at 64 to 65% right now. And then with the confidence of that, the highest that America has seen has been at 70. But the good thing to know, even with it being at 65% home ownership right now, you still have 38 million people that still need to rent properties, single family properties out there. So I think the demand is still going to be there for the people that invest, the people that work with you, the people that work with me. I think that demand is going to be there for the foreseeable future for sure.
I mean, I think that lenders take some of the biggest risk, right? Especially when you guys are coming in doing cash out refis, the investor or me gets all my money back and you've got all your money in. So I do believe lenders take the biggest risk. There's so much talk about flood of foreclosures, millions of people who haven't been paying their mortgage, all these evictions, possibilities. What are your thoughts on that? And what did John Burns say about that? Of course, I do have him coming on as a guest on a future podcast in a couple of weeks, but that's the big headline news is millions of foreclosures coming. I don't personally buy into that because I think people just have been taking advantage of the the fact that they don't have to pay if they don't want to, they can pay later. But what is the official, your bank's position on that? Do they think that there's a lot of foreclosures coming?
So that's something that we talk on a weekly basis during our management calls as a company. What we see and what we feel is there is going to come on the market as far as foreclosures, but we probably will not see that until late this year, and most likely second and third quarter of next year. We really won't be able to see that because not only do you have to file for foreclosure, you have to be able to give notice, and then some states you can't even get foreclosures out to people for 6 to 12 months. So some states, like I'm in Georgia, it's a judicial state, so you can get it done in 90 days. But a majority of the states in the United States are not like that. So you get probably some people that are going to be doing short sales that maybe work. And the thing is, you still have rates at an all-time low. So a lot of those properties probably won't even hit the market because either they're going to sell to big-time hedge fund investors that are working to be able to get yield on properties, or you just won't see the inventory because
I am in agreement too. It's just that the news can often create reality, even if it's not reality at the time that it's being reported.
that is true.
So there's so much talk about these foreclosures coming. I I feel bad for people who think that's true and are sitting around waiting. Now, of course, there'll be an uptick, right?
Yeah,
So those in the foreclosure business will have more opportunity, which means our members at Real Wealth will get more deals. I mean, that's really a positive. But foreclosures flooding the market in the way that it did in 2008, bringing values down. It doesn't sound like you guys are seeing that coming.
no, I don't. I don't believe we're going to see that. I just don't believe it's going to be there. And I think the servicers and the people that we have in place and the people that own these mortgages, they would probably do whatever they can to not allow that to happen. I would assume. And those are my words, not anyone else's words. But
Banks learned a lot from 2008, 2009. They don't really want to take such massive losses, and they learned how to, basically do different forbearance programs so that people could stay in their homes, pay later, not pay at all. I mean, sometimes banks took the properties back, fixed and flipped them themselves. I mean,
that
is
is
that is
correct.
that kind of what you saw? Was a different kind of way for banks to deal with foreclosures?
Yeah, I think everyone would probably, if you didn't learn from the past, then it's not going to be able to set you up for success in the future. And so I think all of that stuff while I was in college myself, I think all of the banks and the lenders and the investors that learned between 2008 to 2011, I think they learned how to deal with what we foresee in the future right now. And I think that they're going to have a handle on that for whatever reason, whatever may come up, but I don't think it's going to be the inventory or the opportunity that everyone is going to be asking for.
Now, you guys are you still doing loans for hedge funds and institutional investors looking for 1 to 4 unit
Yes, we are.
residential?
Yes, yes,
What
yes.
what are they doing? Are they still in acquisition mode from your perspective, or are they holding tight? What do you see?
So it has been it was a pause, just like everyone else. But I think a lot of people, the sentiment is now, hey, we gotta buy because prices are still appreciating. So we're seeing people enter the market, not the way it was pre-COVID, but people are slowly, gradually coming back in, and they're buying at a slower pace, not falls to the walls like they were, but they are buying at a slower pace and making sure that their economics are in place. And then I think they're just taking it at a market by market. Um, calculation of where they want to buy and being very particular on those.
That makes sense. Yeah. Um, Now, what we see as a challenge a lot of times is that people might sell a really high priced property on the West Coast. I mean, even a $2 or $3 million property that's a rental, on average, it's more like $1 million because someone might have bought a 300 or $400,000 property 10 years ago. Now it's tripled in value, and they're realizing they're not getting the cash flow out of it that they could if they invested elsewhere. So they sell the property and they need to exchange, but they need to have as much debt on the new properties as they did on
Mhm.
the old, and they can't do it. So, how does commercial financing help people in the middle of a 1031 exchange?
So this is something like I think we started the 1031 exchange product with people probably in 2016. It was something that I didn't even know anything about, and it's something we started as a team to make sure that it was still lending and we still were able to do it. And people are pretty much loving it. And what we see is it's not really done on a single transaction. It's done as you got to buy 5 to 7 houses at one time, and they're buying them from your operators, the people that are in the Will Worth network. And so, pretty much what you have to do is have a single member LLC where those funds flow through to be able to use our type of financing, but it still qualifies on the 1031 guidelines to be able to make sure that they hit all to qualify for that 1031 exchange. So it's something that we're doing, I would say, probably at least 5 to 6 transactions a month right now with it.
Okay, so someone sells that $1 million property, they have
Yeah.
a $600,000 loan on it, they buy 10, even 20 homes somewhere else. They can get one loan through you on that new portfolio on
Yeah, on a new portfolio, they can do one loan, or they can do, let's say, 5 or 6. So those funds will be used as the down payment and the transaction cost from what we're financing. And as long as the total value of properties that they're buying with us equals for what they sold for, they're hitting their mark.
Well, Courtney, that's amazing. We need to do a webinar at Real Wealth on the details of that. That's really a great relief to a lot of people who couldn't figure out how to get that financing piece working. Now, what if in the new portfolio you end up only buying, I don't know, 8 out of the 10 properties you've identified? Are you guys pretty flexible on the loan?
Yes, we're pretty flexible. We're always flexible. People add and subtract all the time. The thing is, what I say is, hey, we're here for the financing. Your checkoff has to come from your 1031 intermediary. So long as you, long as you guys are good over there, whatever you need us to do, we're going to finance on our side. And
Yeah.
then, and it's a real easy, simple process because they're like, hey, I have this money. But usually the 1031, all they do is just send us over a proof of funds, and that's how we qualify the borrower for their new loan. Is we just pull credit and then we're using their funds, and then the properties are going to qualify themselves based upon debt service.
And are these loans non-recourse?
So that is the key. So when you do $1 million plus loan, it will be non-recourse. If it's under 1 million, it has to be a personal guarantee attached with it. And
Okay.
then I get the question all the time if we can lend to solo one 401k or IRA, self-directed IRA, and unfortunately, right now we cannot because those
Okay.
loans have to be absolutely non-recourse.
All right. You knew what my next question
I
was.
knew it.
Well, when you have that product, you let us know because we
I
will
will.
keep you very busy.
Yes, definitely.
All right. And so what I know you well, do you guys do do you do conforming loans as well or just
We do
non-conforming?
no conforming loans on our side.
Okay. Yeah, what's been interesting is of course you get great rates with conforming, and conforming for those of you new to lending is basically using government backed loans, Fannie Mae or Freddie Mac. And they fit the guidelines for that government loan. Um, what comes with that, at least what we found over the last 6 months, is there are restrictions that come with that. So let's talk about it. What are some of the restrictions that conventional loans have that non-conventional don't?
I think the two that you probably will see the most often is we do have a credit score minimum. I think they're probably going to have a lower credit score minimum than us. Maybe. Well, I'll take that back because investment is usually a 680. So we have a 660 on our side. So we can go down to a 660 credit score to qualify for our loan. But the really tall of them is going to be that personal debt income. Our loans, we don't even ask for tax returns or W-2 income. So it's all based upon the property. So it's all based upon that cash flow of the property, as long as they can service the property itself can service the debt. So we're qualifying the property based upon that rental income that it's going to generate or that it's already generating. And so that's really where our basis is going to come from. And I think that's probably the total difference between the two. And then this probably the third thing is going to be, we don't have the cap on the number of properties you can finance with us. So as long as you have the money as far as the down payment or the reserves, if you're doing a refinance, we can finance as many properties as you want. So we don't have that pretty much, hey, set, you have done 10 or 20 houses with that, we cannot lend to you anymore. And that's not the case.
Wow. And what about foreign investors? Of course, we've got so many Australians and Canadians, Europeans that are looking to invest in the U.S. because a lot of people don't realize that as high as our prices have gone over the past 10 years, they're still so much lower than in other countries. So we have a lot of investors coming from all over the world trying to buy U.S. real estate because it cash flows, and it doesn't cash flow in their countries necessarily. So do you lend to foreign nationals?
So right now, currently, we're not lending to foreign nationals.
Oh,
It's just
darn it,
'cause
Cortney.
I
Two
know,
strikes,
Kathy.
man.
I know.
Just kidding.
Please don't let me strike out. But blame it all on COVID. That's the thing we're gonna do now. We're gonna blame everything on COVID. We were trending towards having a program for foreign investors, but when COVID came, it's just really knocked out a lot of our capital partners. And you have to have capital partners to buy these 30-year loans.
Totally. Yeah.
So it's like, I
Liquidity. You
think
got to have money to lend.
you got to have money to lend. So I think as time goes on, and then we get more sentiments and we get confidence back, I think we will have that product in the future. Because trust me, we were there. We were literally, I'd say, at the 20-yard line, about to launch a product, and no more.
Wow. Yeah, I was really just kidding. I just think it's amazing that your that your company is around, because it was really touch and go in March. I was worried about a lot of the independent lenders because the money just dried up, and yet it's still some of the better yield out there and
Yeah.
secured to a hard asset. To me, if I, as an investor, I'd choose to be a lender all day long if it's secured to real estate, especially at a low LTV. I mean, it's about 75% LTV?
Yeah, so right now it's at 75%, and cash outs are somewhere between 65 to 70. And I think that's just the basis of, hey, let's pull back our leverage and let's pull back what we're doing right now just to see how the market reacts. So we'll see how everything goes in the future and see how everything upticks in the next couple of months. And then we know we have an election coming up, so we got to see how the market reacts to the election. So I think everyone is just being a little cautious, and I think probably early next year you'll really see some innovative programs coming out from lenders who are still around.
Awesome. Wow. Okay. Well, let's not talk about elections because I get in trouble every time I mention anything of the sort. It's been interesting times though. And, I think we just got to, like you said, stay focused on the goal, what we're trying to achieve. The rest is just noise.
Yes.
Every single election is insanity. This one could top the list, but when you look back, it doesn't matter. People were successful during elections, during different presidents, during Republicans, Democrats in power. There's been people who've been successful all the way through. So maybe we shouldn't worry so much. I don't know.
I know, and then I think you have to do, as someone has told me when I first got into lending, the numbers are the numbers, so they're not going to change one way or other. So as long as you're analyzing the numbers, then whatever works for you and your strategy, then that's what you need to go by.
That's right. That's right. Awesome. All right, Cortney. Well, it's wonderful to have you here on the Real Wealth Show. And I have a sense you're going to get a lot of business from this. So, but that's fair. You treated me to so many fantastic meals and the different
No, I
conventions that
appreciate
we've
you having
been
me
to.
on. Yes. I really appreciate you having on and taking the time out your day to be able to have me be able to come on your show. And I love it. I've gained so much knowledge from you and your different podcasts and then the different events that you have. So I really appreciate it as well.
Oh, thank you so much. All right. Well, you take care.
You
Enjoy
too.
the rest of the quarantine. All right.
Thank you.
Take care. Bye-bye.
All right.
And thank you for joining me here on The Real Wealth Show. You can find out more about Lima One Capital and how to get financing from commercial and conventional lenders on our website at realwealthshow.com. And while you're there, you'll see a list of resources for investors, including other conventional and commercial lenders, property managers, insurance agents, and more at realwealthshow.com.